Hello and welcome to this very special show. It's that time of the year when we take stock of the year that's gone by, take stock of the hits, think about the misses, but also think about the year ahead. Coming into 2012, nobody really thought, at least I don't remember anybody saying that it's going to be a great year for stock markets, or actually for any asset class for that matter. It's turned out to be a great year for stock markets and a better year compared to 2011 for most other asset classes. How's 2013 going to pan out? That's the focus of this show here. With me is Ajay Srinivasan, CEO, Financial Services at the Aditya Birla Group, joining me to take some questions. Ajay, thanks very much for your time.
Thanks, Prashant.
Great to have you here.
Thank you.
Broadly, as we head into 2013, what are your thoughts? 2012 has been good and great in some cases.
Yeah, so I think 2013 is really going to be, in many ways, the bottoming out of many things and the kind of beginning of a turnaround. I think whether you look at in terms of economies around the world, I think you're going to start seeing the bottoming out working there. I think the markets have clearly bottomed out. I think sentiment has bottomed out. So in many ways, I think you could probably form the bottom in 2012, and 2013 hopefully should be a step up from there.
We're calling it from roller coaster to escalator. Would it really be an escalator move in 2013?
Well, given the markets did reasonably well in 2012 to end, I think your roller coaster is already on and up. So your escalator is going to take it pretty much higher then.
Is it a fast escalator or is it a slow one?
Yeah, I think the slope of the escalator is going to be definitely slower than what you've seen in 2012. I think the gains in 2012, like you said, the opening were clearly more than people expected it to be. I think really in anticipation of what is going to happen going forward, because you look at anything, you look at earnings downgrades, I think they've slowed. You look at rating downgrades, they've slowed. You look at the forecast for GDP, I think they've kind of bottomed out. So I think in anticipation of this bottoming out and things kind of improving, you've seen a huge inflow of money coming in. That's what's driven markets going forward.
But the real excitement started in the second half of the year, right?
Yes.
September, a lot of announcements came from the government.
Yeah.
And then there was some follow-through. Parliament cleared a couple of these things which
Yes.
were announced.
Yeah.
But if you think about it and take the whole year as such, money was coming even before September. The FII number was a big positive even before September.
True.
And then inflows picked up pace from there on.
Yes, I think it was the pace of inflows really that obviously led to the market. I think the policy actions clearly added to to the attractiveness of the market. I think if India grows at 6% next year, which is what many people anticipate, that would be a fairly strong growth in a relative sense in a world that's growing 2.5%, 3%. So the relative growth, I think the fact that reform is back on the agenda, the government is, has pushed through some interesting reform already. I think all of that kind of adds to the attraction of the story.
Along with, as you said, a lot of things bottoming out, I think expectations have also, in a way, maybe peaked off, right? 2010, 2011, we were all exclaiming, oh my God, 6.5%, 7%.
Yes.
I think people have adjusted to that kind of reality.
I think so. I think that's why. Then that's why sentiment is kind of bottomed out, because you kind of adjust to the reality. You realize where you're at, and then you start seeing that things are kind of bottoming out and getting better, and that definitely helps the situation.
Let's just talk about flows, right? That's basically been the big, huge underpinning behind everything. Most asset classes, stock markets, of course, you get day-to-day prices, so it gets talked about the most. What do you think happened? Why did so much money come in? And this in a year where there have been no upgrades in growth estimates or earnings estimates, etc., right? Things maybe are just about bottoming out now, but India has got some $22-23 billion in flows, portfolio flows.
Yeah. So I think you look at it in the context of what's happening globally, Prashant. I think the big theme has really been huge liquidity across the globe. Across the globe, you have very benign monetary policy and a huge inflow of liquidity, whether you look at the US or the euro. I think in that context, when you look at 22 billion, actually it's a small number. It has a big impact on our markets, but 22 billion in that market is in that context.
Ajay, I looked at emerging markets, Asian emerging markets, and India and Korea basically accounted for about 75% of the total.
Yes.
Inflows into the markets. That's huge.
It is. It's also a factor of the size of these markets, because if you look at the relative size of Asian markets, these would be amongst the larger markets. Also, I think like I was saying earlier, I think what these inflows are looking at is you can put 22 billion in now. Where do we see the maximum chance of a bottoming out and a turnaround? And India would stand a reasonable chance over there, because, like I said, everything kind of looking like it is bottoming out. And the sign from the government on reform, the signs that we're seeing in terms of inflation, the signs you're seeing in terms of some of the GDP numbers, all of that suggesting that you could see the turnaround next year. So this money is coming in advance of all of that.
I'll get to that, the impact of the strong outperformance and strong flows into 2013 in a bit. But I just want to ask you, are you sure things are bottoming out? I mean, inflation is still at 9.9% if you look at CPI. Yeah. I mean, growth numbers are still pretty disappointing.
But if you look at core inflation, Prashant, I think core inflation is definitely coming under control. There's typically a lag between CPI and core inflation. So we should see consumer inflation coming down as well with core inflation. So my sense is you are seeing some stabilization of the inflation numbers. And that gives some confidence in terms of what could happen with easing going forward. And in terms of GDP, I think things had fallen, but they don't seem to be falling, at least going forward. So I would say that I would see the bottom being formed in both.
I mean, is it possible that through the course of 2013 we continue to form the bottom? It takes that long?
That's
and
possible.
Only sometime in 2014 does the uptick start?
That's possible on GDP growth for sure, especially because for GDP growth to come back to a level that we are comfortable with, you need to get the investment cycle to kickstart again. That's not going to happen so easily and so quickly. That is going to take some time to happen. But the joker in the pack, as it were, in that case is really not the number of stalled projects we have. Because if you look at the number of projects that have been stalled for various approvals, that's a fairly significant number. So if you can kickstart some of those, then you could see an uptick in GDP faster than a normal investment cycle kicking off.
India's #1 news app just got even better. Download NDTV's new app. Fully optimized for retina display. Full screen view. Faster response time. And Sudoku. NDTV's new iPad app. Download now.